Welcome to the Phantom Investor channel, and today I want to talk about the 10 steps to $1 million and the rule of 3 and 26%. And the focus of today's video will be getting your mind off of dollars and on percent increases. I think I've been doing this a long time. What often comes between us in making this is the psychology in your head. And it doesn't have to be that way. I mean, you can get to here. You can put 15% away of your paycheck every week. You can invest it in index stock funds. And, 30, 40 years later, you'll have this and maybe multiples. But it'll take a lifetime. And that's nothing wrong with that. In fact, I endorse you doing that anyways on top of this. That's your fallback. But today we're going to talk about how to get a 1,000 cash account to get up to here. I'm going to show you the psychology of it. It's just 10 steps. So you start with 1,000. 1,000 doubles. Now you have a 2,000 cash account. It doubles again. Now you have 4,000. Right? Again, 8,000. You're saying this is obvious. Everyone knows this, but you just keep listening. Double again. 16,000. Again. We're going to do this 10 times. 32,000. I mean, this is taking a while, right? We'll see. Double again. 64,000. Okay. Again. 128,000. He's like, that's a lot of money, right? Look at this. Double again. 256. You double again, 512. And lastly, $1,024,000. Right. And you count the steps. You got 1 step, 2 step, 3, 4, 5, 6, 7, 8, 9, 10. You just made 1,000 times of your initial amount in 10 steps. And what did each step have in common? You doubled it. Or you had 100% increase, another 100% increase, another 100% increase, all the way to the end. Each one of these 10 steps involved 100% increase. But we're talking 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Only the same amount of fingers on your hand to get from here to there. Okay, which follows my next rule, the rule of 3 times 26. So you may know we're gonna represent the original sum of money by the number 1, and then we're going to apply a multiplicator to that. That'll be 26. So we enter that in 1.26. That's to say, whatever your original amount is, if you multiply, if it grows 26%, it'll be 1.26 times larger than it was. It's just common arithmetic. So if I were to take my original $1,000, multiply by this number, that's to say that with a 26% increase, I have $1,260. Okay, hope that's clear. So I take the 1.26, that represents a 26% increase on the base, and we're going to multiply that by, again, so we're going to square it. And now we have 1.5876. So, if you take $1,000, you multiply it by 26%, you now have $1,260. We multiply this again by 26%. What do you think that's going to be? $1,587.60. Well, what happens when we multiply? It grows another 26%. What then? Let's see. Can't square it, so we'll take multiply by 1.26 equals, you guessed it, $2,000 and change. All right. So what does this tell you? 1 step, 2 step, 3 steps. You grow your money 26% in 3 steps. You've doubled your money. Why am I talking about this? Because in the financial world, you always hear people talking about, oh, my stock grew by 5 times, or they got a 5-bagger. Ooh, I got a 10-bagger. I had this great stock, it grew 20 times. They call it a 20-bagger. Right? Wow, I made so much money. How many years did they have to hold on to these stocks to get it to grow that much? Years, maybe even decades, okay? Here, I'm espousing, we're looking for high impact stocks that will return 26%. You make a trade. And then, in my experience, when you get these moves like this, it rarely pays to hold on to them very much longer. You're better off taking the money and then going to find the next trade. And there's thousands of stocks in the market, and there's always something that's about to grow. And that's overcoming my fear of not being able to find the next stock, which comes to these stocks. People hold on to these stocks for eons to get them to get this big. How many other stocks lost money in the meantime. So this is your psychology. It is the knowledge that if you grow a sum of money like $1,000 in 26% increments, you have 3 steps before you double your money. And along, you go over here, and when you double your money, 10 steps from 1,000 to $1 million. Now, we're not going to go in this video over strategies, but it's just to demonstrate that you may be looking at investing the wrong way. So these people down here, they're looking at dollar signs. You should be looking at percent increases. If you could have a trading account that blocked this out and only showed this, it would probably solve 90% of your issues. So, whatever you do, when you're looking to make money, one simple thing I do. Let me turn the page. Let's say you have $1,000. I would split that between 4 stocks, max, okay? And probably keep it at 4. And what I would do is I would put a 7 to 8% stop loss on initial order. Okay? This is going to force you to find stocks that aren't going to hit the stop loss. You're going to find high impact stocks that they're growing. I don't know what there's a myriad of techniques, but you want to find a technique where these are fast moving and there's an opportunity to get in, and if it goes against you this much, then you are wrong, you get out. See, not only is money an issue, but time is working against you. It's also a time stop. If it comes against you, get out, move on, go somewhere else, find another stock. So, once it starts growing, if it doesn't hit the stop, you want to choose stocks that they start hitting 10, 15, 20, 25% within, days and weeks. Okay? You want to go, and I'm not going to tell you the details, but you can go online, you can find different people, you can study stuff, but you want to focus on fast moving stuff. So fast that it doesn't have time. It's just growing, right? It's growing like a balloon, it's going, all the air is rushing in. As long as you didn't get stopped out initially, it's just moving. So once you hit 25%, you can either cash out, or what I like to do, once I hit like 31, 32%, I go and I make what's called a trailing stop loss order, and I set it to 5% based on last price. Good till canceled. What that's going to do is that once we've hit this number, if if it starts going up against you, you're guaranteed to get a minimum of 26% return on your money. And once you get the 26, you go and find another stock. You make 26. But sometimes, because of this trailing stop loss order, you may get 37%. You may get 43.6%, 51.9%. That's all gravy. And it'll just move you through this rule of 326 even quicker to doubling. And once you've achieved this doubling, this is just one doubling. You just rinse, repeat, and do the process 9 more times, with the focus on percentages, not dollar signs. It doesn't matter if you only have $1,000. You can get to here. And this is all you need. You just go out, buy some books, momentum investing. There's several authors on it. All you need to do is you need to find stocks that have a low probability of an initial loss, and they move quickly. When the guys talk about, they're 20 baggers, right? They're from $10 to $200. Could be 15 years. Right? Okay, so you got $1,000, goes to 200,000 after 15 years. Okay, guaranteed you do this for 15 years, you get a lot more than 200,000. So I hope that was helpful, and please take away, focus on percent increases, and focus on stocks that move. Low probability of moving against you. Initially, you have a technique. You enter a stock where it's a high probability of it moving, and you are looking for a 26% return. 26% return. And you're not looking to get married to these stocks. You're looking to either cash out 50%, and the other 50% put in a trailing stop loss order. I'll be honest with you, most of the time if you just cash out and step away, you probably make more money than if you do this. Because this will just force you to go out and look for another high impact stock. But I get sometimes a little lazy, and if I could put a trailing stop loss order, make a few extra bucks without even thinking about it, I will. But sometimes these stocks will go up. You'll get some stocks that will go up, but they start to become something like this. They'll never invalidate your 5%. They'll actually lock your money up, and then you won't be able to go A, B, C, and then repeat 1, 2, 3, 4, 5, 6, 8, 9, 10 times. But it should be okay. 5%. If you can get a high impact stock, 25, 26, 30%, a lot of times you're never going to get past, your 43. Maybe sometimes you get a 50% return before there'll be a gyration, stops you out. You take your money and you go, you find your next victim. So now it's up to you to go find a trading philosophy, to go in search of these stocks with, these fruits, that they're going to make high returns. They're going to, perhaps it'll take them 5 years to go 100%, but you're going to catch them in a cycle of quick growth. You're going to nag out that 25, 26% of that growth, and you're going to do it in several weeks or maybe a couple months. But if this is any indication, you don't want to stay in these two things too long. You want high impact, good 26% return. That's it. With the knowledge that when you do that 3 times in a row, that's 100%. It doesn't take 4 times, it's only 3, because that's how, your money compounds. That's focusing on this. That gets your double, Another thing before we go, what I like to do, so you don't get discouraged, say you split your portfolio 4 ways. 1, 2, 3, 4. You invest this money into a stock. Okay? Only when you've gone past this initial stage and you are somewhere in this region, do you invest the next portion. I don't want to see you get stopped out. Like you invest 4 different stocks and 3 or 4 of them get stopped out, and you have 3-4 times this amount of stop in your portfolio. You want to just say you're going to split this $1,000 into 4. This is going to take a lot longer to get this train going using this technique, but I think it's better. You just put this 1/4 of it into one stock, and if it gets stopped out, okay, you go back and recalculate your portfolio, take a 1/4, and do it again. And only when that 1/4 is profiting for you, and you're about to enter that region where you can apply like a trailing stop loss order, do you start looking to invest the next thing. You want to get to the point where each stock is a different maturity, and if there's a stock that's going to go against you in your portfolio, it's only going to be like 1 at a time. So you want a proven winner before you start putting your money into the next portion. Okay? So that has been the 10 steps to $1 million from 1,000, the rule of 3 and 26%. Thanks for tuning in.